Good morning, everyone. Hey, Raj, good morning. How are you? Good to see you. Hey, Lonigan, how are you? Good, good, good. Well, you're at work. They're slow coming into the room this morning. That's okay. So, welcome everyone to Tuesday, the 18th of March. We are now trading the new June contract. I have rolled over, and when I roll over the contract, I tend to kind of sit and watch more than trade. It's a new contract. I want to see how it works with levels and what I have to adjust. And so it's just smart business, right? When you are watching or when the business environment changes, right? There's a major change. You got a new contract. It's what, 50 points higher than the old one. So we want to make sure that we don't do anything silly. So let's take a look and see our overnight inventory right now is short once again. Once again, we had a move higher yesterday. Let me just bring that in. Okay. Overnight inventory is short because the bulk of the volume is underneath the previous day's close. Okay. Yesterday, we had a move higher at the end of the day and then sold off. But you can see that people were stuck short. This level here is 5704. Okay. And our low tonight is 5707 half. We're holding that level. I want you to look at this. Now, I wish that stupid Epic pen would have downloaded, but they just will not accept a password from me to able to download it. I don't know what the heck's wrong with that site. If anybody knows an alternative for a screen marking other than Epic Pen, please DM me and let me know. Hey, Joe, Mama, I trade one instrument because I would rather trade one thing well than 20 things poorly. And I'm a man of simplicity because I'm old now. So I like the ES. I've been trading the ES for 12 years and I kind of know it. We've got a good relationship and I don't cheat on it with other markets. Right. For me, unless I'm in control of 20 or 30 stocks, that's a different story. But if I have to trade something and devote my attention to it, I like to do one thing well. And the ES is liquid enough that you can trade size. Um, and you know when to trade it, when not to trade it. So I just trade one thing. I like to keep my life simple. Now, I'm not saying don't trade other things, but don't trade three or four markets poorly, right? Because a lot of people they go, "Oh, yes, nothing's happening." Well, you're trading at the wrong time, right? Um, or you don't know what you're doing, and then they go trade another market and get destroyed, and then they go trade another market, and markets are they're like fads. You know, a couple of years ago, everybody wanted to trade the RTY, the Russell. So I did levels, and I was actually calling out both markets simultaneously, ES and RTY for traders. That lasted for about 3 weeks, and then people just started losing money on RTY, and then they gave up. So here's the more important thing about this morning. Look at 5704. All the inventory for the last one, two, three, four, 4.5 sessions is underneath 5704. So now we're in distribution above 5704. Does that kind of make any light bulbs go off? This is a TPO chart. It's set on blocks so you guys can see the value area. The value area is a fancy way of saying where the inventory is priced at 70% of the inventory. So every day is a distribution, right? 70% of the inventory here is priced over 5660. Here, 70% of the inventory is priced under 5620. So in business, you take this cheap crap and you sell it here. If prices hold steady, that will attract people to come in and buy, and then you can sell higher. This is called distribution, right? Remember, it's a market, right? So I said on the old contract, once we get up to this level around here, you see just where the blue stuff is here at 57.73. It was different on the old contract, but I said, watch out because we don't know what's in here. I said, we'll like to take this stuff and distribute it up here. And that's exactly what's going on. But once we start getting up to the 70s, there's going to be some resistance because there's going to be supply here, right? So that's something to watch for. What a wholesale nature of business is to take this inventory here under 5704, sell it between 5704, and this level here is 57.51 and three quarters or 57.52, 57.52 quarter. That's what that level is right there. So it's good to know where you can expect selling, right? This is a longer term chart. I'll have better levels for you. I'm just going through them on the new contract. Let's go take a look at our TPO. Here's our overnight high, right? I've got the close at 32, 57.32. Inventory is short, right? Blue is the value area. That's where 70% of the inventory is priced. So if this was a car lot, right? If this was a car lot, the majority of the inventory is in cheaper cars. Get it? Right? The width is showing time, right? So there's a volume and time because it takes time to accumulate volume and it takes time to sell volume. If you've ever sold size in your life, you'll know you can't sell size in a second. It takes time to distribute, right? And generally, it also takes time to accumulate. So then we go to our 1 minute chart. I've got, let me just show you here. So my cost basis, I'm looking at that low, that high, and when we come back, we come right back to that low. So there's a cost basis here that's two-sided trade, 57.10 half to 14, double it to 21, double it again to 35. Why do you do this? Well, it gives you nice targets, right? If you're a day trader, right? The other thing too is if you're thinking if the market gets up here to 57.31, should you be going long at 4 times profit of cost basis? And down here, right? If we go to 4 times discount, do you want to be shorting it down here at 4 times discount? It kind of gives you what we call situational awareness, right? So you're not shorting in the hole, you're not trying to buy the high. Thanks, Cuckoo. Much appreciated. Hey, Patrick, Travis, Lonigan. Good to see you guys. So, overnight inventory, Howard, is short. Why is overnight inventory short, my friend? Hey, Petra, how are you? Market profile is a wonderful tool. However, for actual trading, there are about 4 or 5 principles that you only need. Poor low, poor high, single prints, and where the inventory is priced. Everything else you can just kind of take and put aside because you can't remember it all. Just like trying to remember 50 million candle patterns when you're getting punched in the face. It's not going to happen, right? Hey, Donnie, what's going on? Right? So, yeah, inventory is short. That's why we're getting this creeping up movement. We had a correction, right? We had overnight inventory is moving down. Why? Because people were trapped short here, right? The I period, that's where people got caught short. Because if they were shorting using F and D as their stops, right down here, the market ripped on them. They had to average up. I'm talking size traders. I'm not talking us, right? They overnight they shorted it into the close. This gives them what we call the ability to cover their position with some dignity. Overnight markets are used if you're stuck short, you can probably, unless you're really stuck, you can probably get a little bit of cover in the overnight because there's not as much buying. If you're trapped long, sometimes the overnight will help you get rid of that inventory. No, 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 no. It's Joe. What I advise you to come into our room. We have a 7-day free trial, right? It's not going to cost you anything. We'll teach you about TPO charts. 70% is the blue area. Green is outside 70%. It's like where's the stuff priced, right? So you have 1,000 units of something. 70% of it is priced at this price, and 30% is outside that range. That's all it is. It's not showing what shows where buyers are trapped and waiting are where the stops are. So if the market drops and takes out that M low and the L low and the K low, the short sellers will be sitting there like hungry dogs waiting to buy. That's why sometimes you break a stop and move back up, right? But we will talk about that in detail in the room, right? I'm always in there teaching. We also have a coaching class that's lifetime. Oh yeah, this it tells you exactly where the buyers and sellers are along. Yeah, and you know what? Here's the thing about market profile. I love the people who invented it, but they're ex floor traders and they assume you know what inventory is. They assume you know what cost basis is. You would be surprised how many retail traders don't know what cost basis is, right? Come give us a shot, right? I'm saying that, a little bit for advertising and hopefully I can get you to stay. We don't charge a lot, so it's not a big deal, right? Give it a shot. I promise you will learn more about the practical aspects of trading in 7 days than you will anywhere else. We don't use double talk, no mumbo jumbo, no fancy language. It's blue collar trading. It's how do you use the information you see to make some money and not get your ass blown up, right? It's just simple common sense trading, right? I was doing a one-on-one with one of my young guys yesterday, and I showed him what we had, in the 90s. Before this, we had like a monochrome green monitor with prices on it. That was it. So this looks like a look above and fail of 21. So say you are shorting this, right? So our what we love to do is the look above and fail. right? We like to short once we've identified that there's a seller. Like there's evidence of a seller. So if you are short, say you're short 20, 20 and a half, put your stop at 21, 21 and a half. Now, where are you going to cover? Well, I would say there's going to be some bids here at 19. And if you break through those bids there, the next place you're going to be bid is 18 on the way down. You can tell a lot from a candle chart. Candle charts have been used and abused, right? With all the technical indicators and the patterns and all of that stuff, but they don't teach you why the pattern exists, right? Your trades are based on business. The only business is lack of supply or too much supply, right? Because you're not introducing supply. We're trading, 5, 10, 20 E-mini contracts at the most, right? Some big traders 100, right? So we're not moving markets, right? So we have to find out where the sellers are and where the buyers are. Right now, the market is offered beneath 57.21. Why? Because the sellers are competing. Now, so we caught a bid here at 20. Check this out. So we see some bids here, right? And watch the offer at 21. See how it hits 21 and comes back down. It hits 21 and comes back down because nobody is willing to buy 21. It's really simple. Now, see it hit 21. Now, let's see if we can offer 21 quarter and print it, right? Watch. Just watch and concentrate. Don't look at the VIX. Don't look at your Twix. Don't look at your cell phone. Stop surfing Instagram. Pay attention and focus. Watch the offer. When the offer moves higher, sellers see buyers. When the offer moves lower, sellers are lowering price to capture the buying, right? So there are sellers competing at 21, 20 and three quarter, 20 half, and they're pushing price down. If you're a short seller, you need sellers to push price lower, right? That's why people get into a short and they get screwed because they lose their seller. They don't even know that they're supposed to be a seller. And they're, oh, it's too high. Yeah, but if there's no seller, it's going to keep going higher. Because if you had 1,000 contracts and you saw buyers, wouldn't you raise price? Think about it, right? You need to think when you're trading. None of this is random. If you think this is random, I've got some oceanfront property in Saskatchewan to sell you. Beautiful views. Look at that offer. So say you're short 20 and three quarters, 20 and a half, right? You can see they stop selling down here. See? Right there. Right? Support is created by the lack of sell orders. It's not created by big bids. Okay, Kenny, thanks. So now, when you see a market doing this, it's kind of doing this back and forth dance between 19 and three quarters and 20, 21. There's no trade, right? So immediately, right, your mind chills out, right? Immediately your mind chills out and you stop chasing your tail like a dog looking for a trade, right? This allows you to relax. When you relax, you can see the market better, right? The reason why retail traders lose a lot of their money is because they're trading when they have no business trading, right? Learn when to trade and learn when not to trade. It's going to save you a crap ton of money, right? Hey, Caution, what's up? Right? So I believe in practical trading psychology. If you understand the business, right, then you know when to transact and when not to transact. There's no use using trading psychology after you've blown up your trading account. That is useless as you know what on a bull, right? Completely useless. Trading psychology should be used in conjunction with the understanding of the underlying business. Okay? So you know when to do business, when not to do business. Now, here's the good part. As retail traders, the only thing that you can control is your risk. The other thing you have to understand is you must do business on your terms. So when the market shows you a business opportunity, a trade, that you are prepared for, that you have a method of execution for, that you have practiced, that's when you execute, right? Your trading psychology has to be practical. Otherwise, it's a waste of time, right? There's no use blowing up accounts and then going and sitting on Dr. Phil's couch, right? And that's not how it happens. Trading psychology is great, but you have to be practical. There's, if you're trading at the wrong time, there ain't no amount of psychology that's going to help you, right? If you're chasing trades, if you're not using stops, now the offer is lifting. So is this a look below and fail of 21? Maybe, right? I also put a timer here to show how much time is left in the candle, right? When good information is lacking, you should not be putting money at risk, right? When you have bad information, why would you put money at risk, right? A little bit of common sense never hurt, okay? A little bit of common sense in this world never hurt, right? So there are sellers here. No reason to go long. If you are shorting, the sellers are stopping at 19 and three quarters. So if you are short under 21, you need the market to offer underneath 19 and a half. Otherwise, there's no reason to take a trade, right? This will save you frustration. It will save you getting stopped out, right? It'll save you pulling out your hair, right? And you just wait for your trade, right? Now, a lot of market people say you got to be patient. I like to reframe that. Why not be smart? Being smart leads to being patient, right? You can't run around like a chicken with its head cut off in this business, right? You'll just get eaten, okay? You got to wait for your opportunity. You've got to understand when to transact. You have to transact on your terms. That's the only way you can manage risk. Because if you don't transact on your terms, you are at the mercy of order flow that you do not understand, right? Spend some time watching, right? I haven't taken a trade yet, right? I'm still on sim on this account. The other account, I'll go switch it over to live now. So I have a 5-step method. There we go, right? So what happened? They are forced to sell under 19 and three quarters. I trade when my setup presents itself, Joe. That's it. I'm in the UK, so I'm in front of the screen right now. It's 8 o'clock UK time. So I'm in front of the screen from about 5 in the morning UK time till about 9 at night. So there are times where I won't trade. Um, I do a session from 9 o'clock a.m. to 10:30 Eastern time, And after that hour and a half of being on live, I just take some time off. Um, my trading is really, it depends on whether my setup presents itself. I like Globex because it's nice and slow, and lately the ranges have been pretty good. Right, there have been some decent trades. Right, um, yeah. When I first started trading, um, I would never trade the open. Right, it took me years to figure out how to trade that open quickly. You would go long once we crossed those two red lines. Well, that's the thing, right, DJ Trader, because we know that there are sellers here. So if you're going long, see they engaged right here, right before the red line. So yes, I would once I see this area being cleaned up, I could go long. But I know that there's going to be sellers at the tops of these candles, right? Because why wouldn't you sell if you sold there before and the price is coming back up, right? Globex is what you're looking at now, Joe. It's the overnight session. What's going on in the room? Where are my guys? All the questions are coming from YouTube. You guys awake in the room? What's going on with you guys? Or you're just all watching the offer like I told you to, right? Couple of years in the UK now. You're awake. Hey, Moran. On and off for a couple of years. Oh, we caught a bid, right? Caught a bid, right? There's some buyers underneath 19 and a half, so let's see if they'll pay 20, right? There's 21. Right? See, we came right to the cost basis of the overnight. That's where the overnight point of control is time, volume, right? Because the market gets sold down to where people bought it, they stop selling and raise price, Joe. Remember, it's a market, my friend, right? This is a sales chart. It could be a sales of apples, right? Coconuts. This happens to be a sales chart of ES contracts. It shows you how sales are on a minute by minute basis. This is a half an hour basis. That's all it is. What's up, Travis? Yeah, I'm gonna watch for a little while. This is my first. This is like a first date with the new contract. Know what I mean? Like I'm putting the contract out for coffee. Get to know her a little bit, right? Don't be too pushy. You know, listen. Don't talk too much, right? Get to know it a little bit, right? And that's why I like trading one instrument, right? Because I really want to. If I'm putting money on the table, I got to know what I'm doing, right? I mean, I've been in the business for 33 years. People who throw money around like drunk sailors, they don't last very long, right? The new contract does take a while to get going. That's a great question, right? If you go and look at where is it here? Right? So there's the old contract, the H, right? M is the new one. The volume is more in the new one now, but you can see that they're quite evenly split. So now London opens. Let's see what shakes loose. Right? This back and forth, don't get sucked in by that, right? Don't get sucked in by that. I don't know. I've never stayed long overnight. It's like 11 or 12 grand to hold that crap overnight, right? For one contract. right? I'm a day trader. I trade on cheap margin. I will trade the new contract from today because it's got more volume than the old one. Very simple. Yeah, I have nothing against swing trading, but I've been in the business for 36 years. I've had a quintuple bypass. I died, came back to life, and I don't like stress. If I want to make six figures over a weekend, I'll do a deal and sell you guys stock. That's a lot easier and a lot less stressful, right? I could sell $5-6 million of stock before lunch, right? Right. Big money is made by taking companies public and doing deals, right? That's how people make $200-300 million in a week, right? They sell paper, they sell stock that they got at very, very cheap, smart money insider prices, right? Swing trading ES and holding it over a weekend in this news environment, I wouldn't be able to sleep. I just, what happens? Some idiot launches a missile. It's just, and the market gaps down 60 points or 20 points. I mean, at 12 and a half bucks a tick, I don't know. I don't like throwing money away, right? But, if you're trading hundreds of millions of dollars, that's a different story. But I've gotten to a point in my life where I like to trade, make my daily bread and be done, right? And a lot of people, they'll go on Twitter and they'll see these people saying that they made 200 grand a month or something like that. And that's great, but most regular people have lives, jobs, got to take their kids to hockey practice. They can't sit in front of a screen and watch things all day. So why not show them how to make a little bit of money, right? Make their life a little easier. See how we came right back down to that blue line? See that? Because there's a mini cost basis here. So we came into it, they stopped selling and lifted the offer. There's still no trade, which is kind of par for the course because the volume is split between two contracts right now, right? So this is new business. The old contract people are cleaning up old business. And you'll look, the low of end period went right to the overnight point of control, to the tick, right? So when we're right at cost basis, there really is no trade. I like to trade from the edges of these zones. I like the look below and fail or the look above and fail, right? Looks below 57.14, fails, comes back up. You buy some at 15, stop 14, sell 17, sell 18, done. Goodbye, right? You don't become a retail trader to be a slave to this thing. Make your money and get the hell out, right? What's the point, right? And you got to get paid, right? You sit in front of these screens for hours. You sacrifice time, right? Okay, there's a seller at 20 half or 20 quarters, sorry. There they are, right there. Can we lift? Come on. Not many customers in the store, right? Order flow. What is order flow? Everyone talks about order flow trading, order flow trading. Order flow trading is a fancy marketing term that means customers. It's just a slow night in 7-Eleven, Shaz, right? It's a slow night. Pretend you're working behind the counter at 7-Eleven. You got that one hot dog going around the rotisserie. It looks like it's from 1949. Every once in a while, the occasional drunk comes in and buys a Twinkie or something. Right? There's nothing going on. Right? It's quiet. Right? What else? What's going on tomorrow? Don't we have a Fed meeting tomorrow? Anyone? Bueller? Come on, wake up, wake up, wake up. Yes? No? Okay. Go back to sleep, everyone. Right? We have contract rollover. Right? We have a Fed meeting tomorrow. So, what have I taught you about Fed meetings? What happens before a Fed meeting? Does everybody rush in and put on risk? No. So what happens? It gets slow, right? So it's a bit slower. Now let's see. Woohoo! Right? We'll test this out on the micro. Long 22. There's going to be sellers up here at 23, right? Long 22, because we cleared the sellers here. There's still this annoying one right here, right? Right here, that annoying seller. I'm offered 23 and a quarter. And let's see if they take me, if we can even get up there, right? Come on, everybody get out and push. I'll slide my offer down to 23, right? Look, there's a seller here, right there, right underneath 23. If it breaks 21, if it breaks this candle here, I know I'm in trouble, right? Because I'm long 23, it's trading 21 and a half, right? If it can't offer back up, I'll just scratch the trade, right? This is a test trade using one micro. I'm not looking to make money. I'm looking to see whether my brain is working and what the order flow is like. Sometimes you got to stick your hand into the dirt and see what it feels like, right? Because trading sim is great to learn how to use the software, right? But sim, hey, I'm out at 23. Okay, so that's the look below and fail. And just like what's his name was saying, DJ Trader was saying, when it cleared that, that's when I got long, right? Just to test and see whether there's any follow through. Now, let's see if we can get over 23 and a quarter. VWAP's at 23. Thanks, Dave. That would explain why there's a seller there. I haven't even set VWAP today. Let's go set it. Thank you for reminding me. Is that 2200? Yeah, there we go. Thank you, sir. Yeah, there's VWAP. Ugh. So now the goal is if we have, hey, John, good morning. If we have the juice, the order flow, we could take that product that we've acquired under 20, 21, 20, go and take it and sell it above VWAP. That's the dream, right? But do we have the order flow to do it? Yeah, make sure you change the contract to the new contract on your execution, Dom. I have never seen that, Travis. That I have never seen. Well, let's see what's next. That's creeping. Right. The question is, have we got enough people short under 21 to help hold this thing up so we can push it higher, right? Because that's where the buying is going to come from tonight, right? You got to trap those shorts and then use them as leverage, right? Now, if we get to stay over 23, where VWAP is, right? It's going to be a slow distribution, right? Because the contract volume is split between two contracts. We might have to wait to get some better order flow. How can you tell? Because when you get down to 21, there'll be buyers. At quarter after 4 in the morning in New York, I can assure you that the buying is from trapped shorts. Now, I'm in a bit of a different position to know about trap shorts because I get paid a lot of money to actually orchestrate short squeezes, or I used to in the old days. So I know a thing or two about trapping shorts. Now, these people are not trapped on purpose, they're trapped by their own bad trading, right? Either way, the effect is similar. Support is created by trap shorts, resistance is created by trapped longs. That's the real truth, right? Resistance is when longs are trapped and they start to compete with each other and lower price to get out of their position. Think about it, right? This is where common sense in business applies, right? We have to use common sense business. This is a chart of the distribution, the accumulation and distribution of a product. Nothing more than that, right? No matter how much fancy math you throw at it, no matter how many algos you throw at it, the business will never change. That's why we don't call it the stock massage parlor or the stock, you know, skincare lab. It is the stock market, the futures market. Don't forget the term market. What is a market? It is where you bring goods to distribute. And now we are in distribution. Let's see if we can take out this A high at 26 half. If we run that stop, that'll create some buying, and we might be able to distribute here between 27 and 30. Remember, folks, Wall Street is just a market. Investment bankers create the product, salesmen sell it, and traders drive the truck with the product to the retailer. It's very simple. That's what a market maker is. Right? We're just truck drivers driving it out. Hey, John, what starts trend type trading or stops a trend as opposed to volatility or rotation? What creates a trend? Well, is when the street takes it. You guys ever heard that term? When the street takes it? That's when everyone gets convinced that they should buy. The worst is to be short a stock when the street takes it. And it's like these waves of buying, right? It's a very different type of price action, right? And you do not want to be short a trend day, right? You do not want to be short a trend day. Nice, Howard. Well done. Beautiful. Beautiful. That's what you do. Keep chipping away at it, Howard. Right? Being short a trend day is like going through the spanking machine like with no off switch. Right. A trend day up. Being long a trend day down is like it's like getting choked underwater. It's when the street takes it, John. So if a trend is when everybody decides to pile on, that's all it is. It's there's no big secret to a trend, right? That's all it is. Just simplify it, right? Some knucklehead comes on and says, "Oh, you got to buy AI stocks." Woo! Right? You get 30 knuckleheads pumping AI stocks. It's a pump or a dump, right? That's what creates a trend. It's very simple. There's no scientific explanation, right? You just convince a bunch of yahoos continuously to come in and buy, right? Think about it, right? Now they're already trying to hype people up to buy the new iPhone 356 or whatever that crap is, right? Remember when the iPhones came out, people would stand in line? They would stand in line overnight to buy a phone? That's marketing, baby, right? Exactly. Here we go. As my old buddy Addy would say, JJ, now we have good distribution. Need big, big distribution. uh, right. So now the inventory is underneath us, right? The short term inventory, the overnight point of control, the overnight time point of control. So now we're going to try and move that overnight POC from 57.18 up, right? To get that distribution. I'm not saying there is a trend. The question, DJ Trader, was how does a trend develop? Not is there a trend? Get it? Right? Like this lower trend that we had over the last week or two, right? When we sold off, that was margin call selling. So when this quarter is over at the end of March, take a look at the 13Fs and see if how much Apple BlackRock sold, right? It'll be negligible. Everyone just got margined out. Does that make sense, DJ Trader? The question was not is there a trend, is what makes a trend? That's all. Like when those guys came in and bought that GameStop, right? So you convinced everybody to go buy some no-name stock. It was beautiful. That thing was trading 13, 14 billion dollars worth of stock a day. You could have sold $1 billion worth of stock into that volume and nobody would have even noticed every day. The liquidity was beautiful, right? Remember, the goal of this business is to sell you as much as we can, as high as we can, for as long as we can. Then you choke on it and sell it back to us at a cheaper price. Then we take it and sell it to a new group of buyers, right? Don't ever forget that. So if you were long, they're going to start distributing here, right? Probably here between 6 and 8, 6 and 30 if we catch a bid. If we get some decent order flow, we'll take out that upper stop at 30 and a quarter, right? So if you were long, this is the overnight correction trade to short inventory. Inventory was short, it is correcting upward, right? Yeah, let's see how this contract trades today. Spend some time, get to know it. Wait to do business on your terms. Don't be patient, be smart. Right? As soon as you tell people to be patient, it flips a switch and they immediately become impatient. You notice that? It's like tell your girlfriend to calm down. She gets more angry. Tell people to be patient. They'll just start boredom trading. See how we came up to 57.30 and the sellers stepped in, right? Look, that's how you use market profile in a practical way. So if you were long 26.25, you know there's going to be a seller up here at 30. Why? Because if I was a size seller, I'd be waiting for all the schmoes to come in here so I could hit them, right? That's where you liquidate. That's why they front ran that stop, right? This gives you practical information on where to get out of your trade. So say you were long at 24, 25, 26, you know there's going to be a seller at 30 quarter. So get out at 29, right? Be practical. Get your money, right? Take the money and run, right? And if you're making money, as soon as you lose 10% of what you've made in that trading session, you should immediately stop and give your head a shake, right? If you lose 15% of what you made, the warning light in your head should go off. Don't give it back. Okay, you worked hard for it. Don't give it back. right? If you just lucked into it, then you weren't meant to hold on to it. But if you worked hard for it, don't give it back. Look, point of control moved up. See? So we've taken that overnight point of control and we've moved it up. That means distribution, successful distribution. Now let's see if we backfill and come back down into this area here at 24. So say you were like, you know, if you had to take a short and you're short 27, 26 half, put your stop above 28 half. Look for bids at 25, right? Short the back end of the move, don't short the front end of the move, right? Traders get into trouble because they're shorting the front end of the move. The front end of the move is for size to liquidate their position into you. The back end of the move is when size traders have to discount their prices to capture the buying. That is your signal to short. If that doesn't happen, you shouldn't short, right? Why would you short a market where there's no selling? Any questions? See, there's a seller at 28. It's not aggressive. Let's see where they stop selling, right? Offer lower. See how slow it is? But you can tell that, see, there's bids here, right? So the market will stop selling off where the buyers are and then run away from them and make the buyers chase. 30-minute candles instead of TPO charts? Yeah, sure. You can use 30-minute candles. You don't have to have a TPO chart. The reason I use TPO charts is when I started trading, somebody gave me a book on candles and it was thicker than the Bible. And I was like, there's no way I can memorize all this crap while getting punched in the face. I stumbled upon Shadow Trader, who led me to Jim Dalton. And Jim Dalton was the only one who's actually ever been on a floor who was showing you practical stuff. Now, I read his book, I read Stadelmeyer's work, and from 2012 to about 2014, 2016, I did nothing but trade TPO. Then the ranges started getting bigger, and TPO was very hard to trade, right? But you can definitely use 30-minute candles if you have to, right? You should be able to know where inventory is on any chart, right? You can just run a candle chart with volume profile. In my trading, you eliminate one side of the market to focus on the opposite side. I don't know what that means. Could you explain? DJ Trader, it's really simple. When I see that there's no supply, I'll buy some, the market will rotate up. I am now the supplier and I'll sell into the demand. Does that make sense? If I see that there's too much supply and they're going to mark prices down, I'll do a little short. I like to keep it really simple, man. I don't know what eliminate one side of the market means. If you could explain, I'd be happy to answer. Well, that's it for me, folks. I'm done. Have a good morning. Trade smart, right? If you want to learn how to do this in a practical manner, come visit us at Microefutures. We've got a 7-day free trial. Come hang out, ask questions, and we will see you in RTH. I'll be back at 9 a.m. Eastern Time. Thanks, everyone. Bye for now.